Okay, so a restaurant owner says that she could raise wages to $15 per hour, and that might solve her labor shortage, but she'd have to hike menu prices, and she's scared to do that. So instead, she's turning to automated drive-through. Now, the question that we are going to tackle today is what does this mean for jobs and the labor shortage and what's going to happen to workers in the long term, right? Obviously, there is a lot of turmoil right now in the labor market. I think that's stating the obvious. You see headlines everywhere talking about the labor shortage and what business are doing and how it could threaten the economic recovery. So this is a serious topic that is on a lot of people's minds. And when you see headlines like this, where she's talking about how she might replace her workers, or she's not going to hire any new people, and she's going to go with robots because they don't complain and they don't have healthcare requirements, and the cost of implementing an automated drive-through might be a viable solution. So that's the question that's hanging in the air for a lot of people, for businesses and for workers, and maybe for you. I don't know if you're in the job market or right now or not, but you're certainly thinking about changing jobs because according to a number of surveys, somewhere between 80 to 90% of the people in the United States would be willing to switch jobs or even switch careers if the right opportunity came along. And then you see a headline like this and you wonder, um, is this going to be the future that I will face? Well, as an economist, I have some things to say about this and can provide some context, about what's going to happen based on the historical data that we have. So let's jump into uh, that right now, and we'll start to first. Well, first we're going to look through some of the headline in the news articles because my channel is about unwinding the clickbait headlines and the bias that are in a lot of economic news and provide to you a proper perspective. So starting with this question of the $15 wages and the robot, let's take another look at some other news articles that are out there. And the truth is, and this is an article that's coming from, or at least this particular headline is from an insider article where it notes that restaurants are starting to hire robots instead of people who are demanding higher pay, right? So the quote from the restaurant owner that you saw in the first slide is something that people are observing that a lot of restaurants and obviously a lot of other firms are considering, as appropriate to their industry. And so the first question then is, you know, there's all this talk about robots, but what's driving this? What's the urgency, uh, you know, that's happening right now? And we know about the lockdown, we know the pandemic, but in terms of economics, what's the driving factor? And so let's take a look at a chart that, hold on a second, let me shrink that so you can see the rest. Okay, so what is this chart showing? So the title says average hourly earnings by industry, right? And this is a percentage change for a 3-month annualized rate. So what does that mean? Let me explain. So this is a calculation of the first 3 months of 2021, and they have taken an average of the 3 months gains and then multiplied it by 12 to get an annualized rate. So they're taking an average of the 3 months and saying, if this trend is to continue for the rest of the year, then what is the total percentage gain? And you can see that some of these numbers are actually eye-popping, right? Transportation and warehousing will go up by 18%, leisure and hospitality by 15%, retail by almost 10%. And you've seen in the news that a lot of the, um, you know, a lot of the uh, urgency that is coming from restaurants and retail operations saying we can't get anybody to work for us. What are we supposed to do, right? And um, to continue to put a better context on exactly what's going on here. So right now we get a grip on the numbers, the hourly wage increases that are causing businesses to say, how much more do I need to pay workers? But if I actually do that, then what does that do to my prices? And am I still going to be competitive in my industry? So moving on. Um, this is continuing on from the same Insider article. So it's quoting, it's basically saying that major firms like McDonald's are struggling with the national labor shortage. Many of them have begun turning to technology as a replacement to low-wage workers. For instance, Cracker Barrel rolled out a mobile app that's letting customers pay for meals. McDonald's started testing automated drive-through ordering at 10 Chicago locations, and Dave & Buster, one of my favorites by the way, plans to expand its contactless ordering, right? So you saw the numbers in terms of percentage increases for wages, and this is uh, a consequence of that. So now, um, you know, there are all these conversations that are taking place in businesses and maybe even in boardrooms, and saying, what is the right solution for the labor shortage, right? Is automation the way to go, right? Because they don't complain. Robots just do their jobs, right? Is it that simple? Well, let's keep going. So, um, so in order for us to start putting the proper context, the proper perspective on what's happening. Now, it goes without saying that the current pandemic lockdown and the resulting recovery of the economy has highlighted an issue that actually has been going on for a long time now, right? So, to quote from uh, this article, economic data suggests that the shift to automation has been underway for months now. Productivity surged 5.4% in the first 3 months of 2021. That is the fastest rate of improvement in more than 20 years. This jump came as businesses had just started rehiring, suggesting the increase had more to do with the continued use of pandemic era tech, right? So, like we were saying, the issue of automation has been an ongoing thing for the last 20, 30 years in modern times, and it actually goes back to the invention of the steam engine. And we are going to talk about the historical data. We are going to give a more historical perspective on this. But right now, what this text is suggesting is that even for the recent periods before the pandemic lockdown, there has been a movement toward productivity increase. And now it's really popped, right? The urgency of the labor market shortage has really pushed businesses to the edge. And now workers are faced with the question, am I about to be pushed out of a job by automation? Okay. And that's really the more serious policy question for us to consider, right? So continuing on with the data. Okay. Um, so businesses are tired of waiting for workers and are increasingly turning to automation instead. That's exactly what we said. The trend has swept through the restaurant industry as the labor shortage is hurting hiring. And again, you saw that in the data about the percentage increase in hourly wages, right? A lot of restaurants are actually paying up to get those workers, and it's squeezing their margins, right? Now, the article does note people have long feared automation destroying jobs, but it could also kick off a virtuous circle that helps the economy. Now, let's pause right here and just kind of think about that. A lot of people are going to be nodding their heads when it says, automation is going to be killing their jobs, right? They're going to be scratching their heads when there's this talk about virtuous circle, right? In the article right here about it actually helping the economy. And a lot of workers' reactions might be that, well, maybe it'll help the economy, but it's not going to hurt. It's not going to help me, right? I might lose my job to a robot, right? I mean, I'm a server at a restaurant. and maybe they're going to have automatic contactless, menus because that's best for COVID safety practices and it cut down costs. I mean, is that the future I'm facing, right? Now, how could that possibly be a virtuous circle? Well, as an economist, let me provide some clarification. But first of all, let me just say, no, automation is not a virtuous circle for everybody. Some people are going to lose out, right? That's self-evident, quite frankly. I mean, if a robot marches in and suddenly you're out of a job, that's not so virtuous for you, right? But we're talking about it from a policy perspective, from an overall economy perspective. What are the short-term and long-term effects of automation? And we're going to delve into that. And some of the results of the data that we've seen, uh, you know, from the past may surprise you, right? And at the end of this, I'm going to talk about exactly what you can do to protect yourself against the risk of automation, right? You don't want Mr. Robot to walk into your workplace, walk into your office and say, "Hey, you're out of here," right? Okay, so we'll get into that at the end of the video, but let's go on. So there are a lot of misconceptions about what actually happens when you automate a job or automate the economy. And the first thing to consider is that technology doesn't really automate jobs. It automates specific processes. It automates specific tasks, right? Now, consider the job that you're doing, no matter what it might be. Can a robot simply walk in there and saying, I know what you do from start to finish, from early in the morning to late at night when you're ready to clock out or whatever you do to get ready for getting back home? Can it really do that? No. A lot of the software automation and even some of the more, some of the robotic automation, uh, you know, is really about identifying specific tasks and figuring out how to make that, a part of automation. For example, if you've seen a manufacturing facility, for example, for automobile manufacturing, you'll notice that there are robotics there, but they're not walking around doing the work of a human being. They are doing a specific, very focused task, right? And that's the first thing to understand about automation. So it's often the case, or sometimes the case, that automation will eventually lead to a loss of a job, right? But automation by itself, the way that it is being done nowadays, doesn't guarantee the loss of a job. So that's the first thing to consider. So, as you read in this text, an alarmist headline like "Study finds nearly half of jobs are vulnerable to automation." You need to put it in context. Nearly half of all jobs contain tasks ripe for automation. Those jobs may or may not be at risk, right? Okay, I need to actually shrink this a little bit so that you can read the text. Um, so that's the point here that a lot of people in the public actually miss, which is that, you know, no robot is going to simply walk in there and do the entire scale of your job, right? It's simply not possible at the current rate of technology. I mean, you see it in the movies, but that's Hollywood. That's not reality, right? And so when you think about that it requires an isolation and identification of specific tasks for automation. The concern starts to shift more in the direction of, well, then how does robotics impact the job that I do, right? You saw in the previous article that automation was being credited for an increase in productivity, right? And so there may be some tasks that you do in your job that is better automated and will free you up for other types of work. Now I know that sounds good in theory, and oftentimes the reality is more harsher than that. But as we say, let's keep in mind technology is able to automate tasks, but it won't immediately wholesale remove the job for you, right? And remove your job, right? Now, let's go on further with this analysis, right? So this particular drawing, I think, is a little bit humorous, but it also explains the, you know, the realities of automation. So without getting too deep into what it's saying, let's just summarize the point that it's trying to make, right? The title says, I spent a lot of time on this task. I should write a program automating it. Let me just take this thing that I do and automate it, right? And that's the dream, right? I mean, maybe you yourself have sat in a on your desk and thought, I do this one thing all the time, over and over again. Isn't there some software that could do this for me so that I can concentrate on other things, right? Now that is the beautiful dream, but the reality, as you'll see down below in this diagram, or I should say this drawing, is that you know the task of automation is a lot more complicated than people might think, right? Because there is writing of code, debugging, redesigning, understanding what the task is, how it impacts the work of other people, and even after you believe that you've completed the automation, right? There is still ongoing development, ongoing work that needs to be done to maintain the code or maintain whatever mechanical automation process that there is. And if there is a particular change in how you perform the task, well, then you've got to change the automation again, right? So um, what we're saying is that the task, the dream of automation is not as simple as the actual reality, right? First, we realize that we can only automate tasks, not jobs, right? And even that, when you consider the reality of it, is that it's a lot more complicated than people might think, right? In fact, there might be as much work done in terms of maintaining the automation process as there were in the original task itself, right? And as we know, uh, many times, the dream is often so much better than the reality, right? Business processes are very, very complex, and you don't work in a vacuum. You work in modern times in collaboration with others, and so a task automation is not as straightforward as you might think, right? So keeping those two things in mind, let's continue on with the analysis. So here is a wonderful example from historical data, because I mentioned that we're going to look at some historical data to give us clues about what might happen in the future, right? And reading from the text, before the invention of the steam engine, more than 95% of humans were employed on farms, whereas today this number is around 2%. Wow, that is a dramatic turnaround, right? The remaining 90% of the population didn't disappear or go out of a job. Instead, automating farm work freed up the labor force to be put to more productive use over time. Some young laborers went to school instead of working on the family farm, excuse me, while others started working in factories. Over time, the labor force reallocated away from agriculture and into manufacturing and services. So understanding that is a kind of an abstract historical summation, um, we do understand that when 95% of the human workforce transitions from one industry to another industry, there's going to be quite a bit of adjustment and pain and anxiety involved. So let's not gloss over that fact. I'm sure there was a lot of angst. And of course, as in modern times, probably a lot of headlines in the news about the doom of agricultural life and agricultural jobs, and the steam engine means the loss of all our jobs. But the reality is, as painful as the adjustment might have been, and the fact that it did take some time, right? The invention of the steam engine, in its own way, a form of automation, right? It didn't, in fact, kill jobs. In fact, it freed up new opportunities and new industries that were made available to humans. Okay, so continuing on, right? Now, the reason why I bring up this chart is because this is an excellent example of what actually happens when automation becomes a part of the workforce. Because like we were saying, right? Even if robots only automate tasks and not entire jobs, right? How would it impact the work that you do, right? So let's take a look at this chart and what is this telling us, right? So in the early 1980s, there was a thought by bank execs that if we put in more ATMs, we would have to hire less human tellers and thereby reduce complaints, increase speed of processing, and reduce costs, which is really the number one point of all this stuff, right? And so when you look at this um, chart, the x-axis is a time series going from 1970 to 2010, and then the y-axis is the number of tellers and ATMs per 1,000. So the dotted line is the ATMs, and the solid line are full-time bank clerks, right? And you see what has been happening over time. There was an initial thought that we should increase the number of tellers, right? And the number of tellers really reached an early peak around 1990s when ATM machines were very few, right? And then you see the number of teller machines really accelerate starting in 1990, goes up and up and up and up. And you do, in fact, see a corresponding drop in the number of human tellers. Not nearly as much as the increase in actual installation of teller machines, but there is a corresponding drop. But here's something very curious that happens around 2001. Okay, even as the number of ATM machines go up, the number of human tellers that are actually hired also go up, right? Now that's counterintuitive. Look at this part of the chart where the ATM machines went up and the number of human tellers went down, right? Now that is kind of in line with our intuition about automation. But now, starting in 2000, the process reversed itself, right? How can ATM machines and human tellers both go up at the same time? That doesn't make sense, right? Um, well, let me explain what actually happened, right? The installation of ATM machines did in fact lower costs. It was actually quite successful, right? But here's what also happened. Banks execs realized that because ATM machines had lowered the cost uh, of operating a branch so much, they had the opportunity to open more branches, right? So what happened was, as more and more branches were opened up, right, the actual number of human tellers also increased, right? So it wasn't that the number of human tellers per branch remained the same. That did go down. But there was a counter effect where the branch, because of the money that was saved, was able to open more branches and expand into more geographical territories. And if you worked at banks, you know that geography and location really do matter, right? Especially for banking. So that in itself, so let me bring this chart up again because it's actually quite humorous. Um, I mean, it's funny to think that, ATMs were the doom of human tellers or bank clerks. And in fact, in the aggregate, not per branch, but in the aggregate, it ended up being a boon to their employment, right? And now we can think back to that other quote that said that there might be a virtuous circle. Now, do you see the point of what economists often discover in the actual data itself, right? That automation can have a virtuous effect on the overall economy, right? Of course, in this chart, you know that certain bankers over time were let go from their jobs. That goes without saying. But um, the increase in productivity, the decrease in cost can actually provide more economic opportunities for humans as well. That's really the point, right? So a quick summation of automation effect is one, it is about automating tasks, not jobs, right? And two, it may actually open up more opportunities for people because of increase in productivity or simply from a lower cost where there's more money that can be allocated for business expansion. Okay, so here's what happened. As an overall view of automation, right? So let's take a look at this chart. The title is Average Annual Hours Worked per Worker for the G7 countries, 1950 to 2015. So if you're not familiar with G7, that's simply the major 7 largest industrialized countries in the world. Okay, and you can see that it includes United States, United Kingdoms, Canada, France, etc., etc. Now, what is this chart really telling you? Well, on the x-axis, you see the typical time series, timeline. And on the y-axis, you see the average annual hours worked. Now, what does that mean? It's important to understand this is the average annual hours worked to produce the same unit of production. In other words, over time, people are having to work less, they can work less and less hours to produce the same amount of goods, the same amount of manufacturing, same amount of services, right? And that is what we call productivity, right? When productivity increases, what we're really talking about is it takes less effort to produce the same amount of goods, or maybe even more, right? And there is pretty strong evidence to suggest that one of the biggest factors in how this happened is technology and innovation and automation itself, right? So you can see how, in a certain way, this is beneficial not only to the economy, but also to workers as well, because the fact that it frees you up, that, when the economy becomes more productive, right, is able to produce more goods for less effort, it means a general increase in the welfare of the public, as well as new business opportunities, new positions that do open up. As you saw in the example of the steam engine, 95% of the workers transitioned to away. Well, they went from an agriculture jobs to more industrial-based jobs, right? And granting that the process itself is probably very painful for a lot of people, but that is the process of a free market in a capitalist society, right? Now, even as we praise automation even for its long-term effects, we do need to understand that there are some pernicious effects on society itself, right? Now, let's take a look at this chart, and without getting into details, the gist of it is that it's expressing the concentration of wealth um, in the number in small and smaller hands, right? So this figure depicts the share of total household wealth held by the 0.1% richest families as estimated by capitalizing income tax returns, right? So starting in 1978, right, and going on to 2013, we see that more and more wealth of the total wealth of the United States, by 2013, it's I would say maybe 22, 23% are held in the hands of the 0.1% richest families. Now, I am not by any means wanting to get into the politics of this, but historically, we have seen that a concentration of wealth does present problems for um, for a free market society, right? Because of um, political influence and alteration, and where money can buy regulations, where money can buy access to government dollars and purchase subsidies, right? Which is in fact a distortion of the free market. Okay. Now, to sum up what we've been discussing so far, right? The the impact of automation is to automate tasks. It is to free up more additional time for workers by increasing productivity because it takes less hours to produce the same amount of goods, and that does generate more opportunities for people in the long run. There is a general increase in the size of the economy, but it does mean that short term, many people are going to lose their jobs, and the concentration of wealth can be a negative effect on society. Now, the next chart is where we're going to talk about what you can do to protect yourself from the risk of automation. I think this particular chart is rather eye-opening. So let's go take a look. Now, first, let's explain what's happening uh, in this graph, right? This is the cumulative change in real weekly earnings of working age adults 18 to 64, and the data goes from 1963 to 2017. So it's pretty recent data. Now, in the previous talk that I gave about inflation and real wages, I also noted that this type of chart is very eye-opening. It's very illuminating because when you measure real wages or income gains by education, there is a stark difference between the different levels, right? And so this panel separates out the income gains between men and women because in the data we have seen historically, in the past especially, that there is a difference in the income levels by gender. But even more than that, as a truly profound, almost overwhelming impact on future earnings, the real factor is education. Now, just to take a quick look at the panel A for men, right? The red line are high school dropouts, and the, I guess, pinkish beige, is for people with a high school degree, and the top line is for individual men with a graduate level education. Now look at the difference. I'm not only talking about the gap between the top and the bottom. I'm talking about the overall direction of movement, right? From 1963 to around I would say 75, 76, right? All levels of education experienced a rising income, but starting around 1981, there is a dramatic divergence in the cumulative change in earnings, and you can see the difference by education. If you are a high school dropout, or someone who only had a high school education, or even someone with only partial, only some college degree, your income was on a clear decline for decades, right? You reached a peak somewhere around here in 1981, and then it started to drop. There was some recovery here in the 2000s, but again, there's a drop. And look at the amount of the income gains for somebody with a graduate degree, or even uh, you know uh, with a bachelor's degree right here, right? The difference between these three lines and these two are life-changing, quite frankly, right? And likewise, the same goes for the panel B on terms of women. Now, I would guess that this is the effect of technology, software, and automation, which is one of the reasons why I bring up this chart, right? As technology becomes more and more important to the value of your work, right? Um, you know, the divergence you see is becoming more and more profound. This really is an eye-opening chart, right? And so when we talk about what you can do for yourself, in terms of protecting yourself from the risk of automation, I know it's easy to say, and it's a lot more difficult to do in reality, but education is your insurance against the encroachment of robots, right? Look at the chart here, right? If you had a bachelor's degree or above, or graduate, especially a graduate degree, you benefited enormously from this trend, from the impact of automation, from the impact of technology, from the impact of computers. And consequently, you suffered a great deal if you had more limited forms of education. Now, I speculate the wider bandwidth, the wider range of uh, wages for the men versus the women is probably because a lot of men are working in labor-intensive work, like I don't know, construction. There was a show about the deadliest catch, right? Or driving big trucks um, that that suffered more because of the low wages. But in any case, that is the top line thing that I would ask you to consider, right? Um, this trend is not going to go away, right? The dramatic impact of education level and understanding technology cannot be underestimated in terms of your future earnings and your future life, right? So take a look at that chart and ask yourself, what can you do to gain more education, right? And I don't mean to sound flippant, but the data is the data, right? So, um, having some concluding thoughts, we go back to the whole thing about, the restaurant owner. She's thinking about automated drive-through lanes, and I mean, she's already done it. According to the article, she's already done this, right? And so, a lot of these articles are going to scare people, you know, um, but if we look at it from a perspective of an economist who's looked at historical data, we understand that there will be some degree of short-term pain, but long-term automation and technology is very good for the economy, right? Productivity continues to increase. However, that depends on where you sit. That depends on who you are. That depends on your education level. So that's the takeaway from this particular live stream. Now, I want to let you know that in my previous videos, I know there have been some technical problems, especially with audio being out of sync. And I think that might still be a little bit of an issue, but I want to let you know I'm working on those technical stuff. I'm not an IT guy. This is new to me, and I will get those solved for future videos. So, and also, I live stream Wednesday nights and Sunday afternoons Pacific Standard Time, and often I do it more often because there are some economic news that does need to be covered. So there you go. There you have it. I hope you found that useful, and I will see you in the next video.